Good morning to everyone. Hope you can hear me properly. And so we will straight away get down to the topic. Last week we were looking at 3 standards, then out of which we were looking at LKS not 2, and where I wanted you all to do the question at home using the weighted average cost method. So I hope you would have done it, but let's do it in class for the benefit of everybody, so that all will understand how this method is. Okay, right. So everybody can use any methodology. That doesn't prohibit anyone. You can use any format to do this question, but let's try to maintain one common format so that we will understand what is the real requirement is. So this is going to be slightly different compared to the first question that we did under 5.4, because we are going to make use of the weighted average cost method. Weighted average cost method. That is, you are not bothered about the first item which came into the showroom, or the last item which came into the showroom, or which item went first from the showroom, or which item went last from the showroom. So basically, for those to be looked after, you have the FIFO method and the LIFO method. So that I have already explained to you last week. So those two are totally different methods where you have to keep a track of what came in first, what went out first, what came in last, and what went out last. Those are very important. But when it comes to the weighted average cost method, we are not bothered about those things. So what we are going to do is, we will stick to a similar format to what we used. Okay. So we will have the date, and we will have the particulars. Then what we are going to do is quantity, unit price, value. Likewise, quantity, unit price, and value. Okay. Date, particulars, quantity, price, value, quantity, price, value. Okay. But the difference here is that these 3 columns, that is from here to here, we will be using it for receipts or issues. And these 3 columns will be your closing balance. So you have to be mindful about that. Okay. So first 3 columns will be used to record any receipts of stock or any issues of stock. Okay. And the last 3 columns are used for the purpose of maintaining the closing stock. Maintaining the closing stock. So the closing stocks here have to be maintained in terms of units as well as in terms of value. And of course the price. Of course the price. Okay. So let us look at the first one. The first one is a purchase or receipt. So the date is 10th of May. It is a purchase. Okay, it is a purchase. And the quantity is 1005. 5 rupees each. 5 rupees each. So that it will be 7,500. 7,500. So what will happen? The same thing is going to come into this also. 1,005, 5 rupees, 7,500. 7,500. Okay, right. So I hope you all can see the board. The board is visible, right?
Yes, sir.
Fine. So the first item is that we have booked a purchase 1,500. So the value is 7,500, which is being the first transaction. So we have recorded that. Now comes the second transaction. Sorry. Yeah. Now we have the second transaction, which is a issue. So on 11th of June 2019, there is a issue of 1,200. 1,200. And now, as you know, here comes the first transaction. So please follow this. This is very important. Now, for us to determine the price here, earlier we used the FIFO method. So we know which came in first and is there a balancing stock remaining. From that we have to issue it at that price. Now here it is not the case. Now if you are with the line of issue here, what you have to go and look at it is, what is the closing balance and what is the value? Based on the value and quantity, what is the price? Now this is where the average cost price comes in. Now it won't be clear to you in this first transaction because we are straight away having the first item. So what we'll do is we'll record that and then we'll look at whether we are on track. So this will be at 5 rupees. So you will lose 6,000. Now see what is going to happen. Now this is very important. 1,005 minus 1,002 will give you 300 units. Okay, 1,005 minus 1,002 units will give you 300 units. We don't look at the price now. Don't worry about the price now. Now look at the value. 7,005 minus 6,000 will give you 1,500. 1,500. Now see what is going to happen. Based on this value and quantity, we will determine the price. We will determine the price. What do? You divide the value by the number of quantity. Number of quantity. So here, of course, when you divide it, you might get 5 rupees. You will get 5 rupees. That is obvious because this being the first transaction, you will have the 5 rupees. Okay, let's go on further. Then you will understand what is this average cost thing is. Okay, right. So the next item now is on 18th June. That is a purchase. That is a purchase of 1,750 units, 1,750 units at the rate of 8 rupees. So which will make you 14,000. 14,000. Okay. Now see what is going to happen. 300 units plus 1,750 will give you 2,050 units. Am I correct? 2,050 units.
Yes, sir.
1,500 plus 14,000 will give you 15,500. Now comes the calculation of weighted average cost. Actually, weighted average cost methodology, we have to take individual item, apply the weighted price, and so on. But adopting this methodology will look after that weights. So basically, now what we have to be looking at is the average price. So I will now name this as the average price. Okay, weighted average price or average price. So now you have to calculate 15,500 divided by 15,500 divided by 2,050. What is the value that you will get? You will get 7.56. 7.56. Have you all calculated? Is that answer correct?
Yes, sir.
7.56 will be the average price. Okay, the average price will be 7.56. Now let's go to the next transaction. That is on 3rd July. There is another purchase of 2,750 at the rate of 10 rupees, which means 27,500. 27,500. So now again you look at it, 2,050 plus 2,750. So that will make the total units to be 4,800. 4,800. 15,500 plus 27,500. How much is that? I think that is 43,000. If the values are not correct, please let me know. So now the value is 43,000 and the total number of units is 4,800. So now it is up to you to calculate the average price. Average price. So I think you should get somewhere around, round it off to 2 decimals, 8.96. 8.96. Hope that is correct. Okay. Now we come to 20th July. And that is an issue. And you are trying to issue 3,000 units. 3,000 units. Now you look at it. Now you are supposed to issue 3,000 units. So before putting down these 3,000 units, what is the thing that you should have looked at? Whether I already have 3,000 units. whether I will have 3000 units. So I have 4800 units, so that I can easily issue 3000 units. Okay. Now I don't have to worry whether I have from the stock which came first or from the stock which came last. I don't have to worry, because cumulatively I have the number of units with me here. So from the 4800 I can issue 3000. I can issue 3000. So I will issue 3000. The question is, what is the price? What is the price? Now is where you will make use of the weighted average price. So just before this issue, you have to go and see what is the last value that I have. So I have with me 4800 units at the rate of 8.96, which makes 43,000. So from this only I am going to put it out, which means I have to make use of this 8.96 here. I'm using different colors to make you understand. So I will make use of this 8.96 to make the issue. What is that value now? 8.96 into 3000 units. So that is 26,880. Am I correct? 26,880. So which will make the closing units to 1800 and the closing value to be 16,120. 16,120. So again, the average price, because we need to calculate that and keep 8.96. Not just because this is 8.96, but it will be the same answer since you have got a reduction. The next item, that is on 12th of December, you have purchased 2,500 units at the rate of 12 rupees. How much is that? 30,000. So if it is 30,000, 1,800 plus 2,500 means 4,300 units. 30 plus 16, 120 means 46,120. So now you have to again calculate the weighted average price. Weighted average price. If there are mistakes in the numbers, please let me know. So now this becomes 10.73. 10.73. So now on 20th December, you have to issue 1,300. So I have already 4,300. But the value that I'm going to use will be 10.73. So what is that? 1,300 into 10.73. 13,949. So the remaining stock will be 3,000, and the remaining value would be 32,171. And what is the price? Again 10.72, comes to 10.72 actually. So you have to be mindful. It's not always the 10.73 differs slightly. Okay. So this is how you have to do the weighted average cost question. Anybody who has done it correctly, you can be satisfied because this is what is expected. So you can check with your answer. Whether you have done the correct way. So in actual scenario, what happens is people cannot be calculating these numbers when they are doing this inventory management or stock management. So basically what happens is in organizations, they make use of a system, either in-house made software or maybe a purchased software to look after these calculations. And preferably most of the organizations would also like to make use of this weighted average cost method because it is going to be a more appropriate method to maintain the closing stock value. Okay, so in organization, they would like to maintain the closing stock value in a more realistic number. Okay, and this will allow them to maintain their inventory also at an acceptable level. Sometimes what happens, people keep on purchasing, but they don't make use of. So the stocks might become obsolete. So those type of issues will come. So what need to happen is you have to have a reorder level. That is, when you see that the stocks are running out, then you immediately maintain a minimum level where when it reaches that level, that is here, you have to immediately order. So we will see. Now, since there is no policy or reorder level, let's assume that if the company is going to maintain a reorder level of 2,500. So if it is 2,500, definitely they have to reorder, or in other words, they have to do a purchase in all these instances. But when they are here, they will not do it. So they might wait till this comes down below 2,500, and then only they will do the reordering. So we are just looking at an example where only 5 or 6 transactions appearing here. But in real businesses, this will be many number of transactions, and the reorder levels will have to be adjusted accordingly. Okay, right. So please make a note here, just to make you understand the background. Please make a note. In real business world, organizations would prefer to this methodology for maintaining stocks. Next line. Therefore, organizations will make use of external tools such as inventory management systems, which are developed in-house or purchased from outside vendors. Okay, right. So you would have observed that the value that we derived, the closing stock value, quantity, of course, it will be same under the FIFO method or maybe the weighted average cost or whatever. But what was the value under the FIFO method? When we did this FIFO method calculation, what was the closing stock value? What was the closing stock value? The example we did last week. Okay, it was 35,000. Now, what is the value here? You will see it is 32,171. Now, why there is a difference? Why there is a difference? Because here you are using an average price. You are using an average price. But whereas in the earlier scenario, we were more focused on using the very old price for the inventory management. Very old price for the inventory management. So the combination that we had with us in the previous scenario, that is under FIFO method, is a combination of the very old stocks at their respective prices. But here what we have is a reflection of the average prices of all outstanding units that we have. Okay, so that difference you should be able to explain in exams in your own terms. Sometimes you might be questioned on this. A company is using FIFO method and another company is using the WAC method. The closing stock values are like this. What is the reason? So you should be able to write it in your own words. Okay. So then I also wanted you all to look at a question which came in March 2019, where they have given you 3 transactions and they wanted you to calculate the first in first out method closing stock value and the weighted average cost closing stock value. So you will see that it is only 2 marks for this question, 1 mark each. So what you need to do is you have to do it in the shortest way that you can do to answer this question. Okay, right. So I'm going to leave that to you all. Once you do it, we will do it in the class when we are looking at past papers. So I want to move with a new topic today. Where we will look at one of the business concerns that you will come across in your day-to-day operations. Okay, so this is called the sole proprietorship. The sole proprietorship. So what do you mean by sole proprietorship? That is a business which is being managed by a single party or single person. Now, the single person will have to look after everything. Anything to do with that business, he will have to take care of that. Starting from putting in money, making decisions to manage the operations, and also having the profits if the business earns a profit, or having to absorb a loss if the company makes a loss or the business makes a loss. So that is a business where they have to manage by themselves, or he or she has to manage by herself or himself. Okay. So this type of businesses are very widely growing because people will start businesses in their own. Later on only they will decide what to be done, or maybe whether I need to join more people. Likewise, now say, for example, the Facebook, which is very commonly known to you all. So the Facebook was started by one single person, right? With a combination of his friends, but it is an idea and commencement of a single person. But today you will see it has grown up to a level where it is called a quoted company today. Quoted company. So the business or the business idea which cropped up in one person has now grown into a bigger organization, which lot of wealth and giving more opportunities to the society. Okay. So the sole proprietorships are mostly known as startup businesses. Startup businesses. And also you will see any grocery shop that you might see in your hometown are mostly of this kind. Sole proprietorships. One person running the show. Maybe there could be people helping him out, but funding, the managing decisions, managing transactions, everything is done by that single person who is known as the sole proprietor. He is called the sole proprietor, or we call them the single owner. Okay, right. So we are going to look at how those kind of businesses will run and what will be their financial statements look alike. Because the way when we reach finally, we will not prepare the financial statements of a sole proprietor. You will be looking at a financial statement of a banking business. But being in the banking business, you need to be mindful about how to evaluate the financial statements of a sole proprietor. Right. So non-manufacturing entities are trading entities which are engaged in the purchase and sale of goods at profit without changing the form of the goods. So non-manufacturing entities. So like for example, if you are an apparel company, then obviously you are a manufacturing company like Mars, Brandix and so on. Because you manufacture goods and you are manufacturing goods for the sale to the third parties. So your objective is always to make profit. Now what we are looking at is non-manufacturing entities are trading entities which are engaged in the purchase and sale of goods at profit without changing the form of the goods. So which means, now let's say you are running a grocery shop. So you will keep many items on display. Let's say milk powder. So you are not the manufacturer of milk powder. What you will do is you will go and purchase it at wholesale price from another seller, bring it into your shop and you will sell it there by keeping a small markup. Now that is kind of a non-manufacturing business. Non-manufacturing business. So what you do, you will not change the form of the good. Now if it is Anchor milk powder, you will bring that to your shop and you sell it. You can't say Anchor milk powder to be some other name with some other name. No, that you can't do. You don't have the license for it. So what you are doing is you are purchasing a good from another party, bringing it into your shop and you are selling it. What is the underlying objective? To make profit. So non-manufacturing businesses do not process the goods. Instead, they sell them in its original form. Sole proprietorship is also a form of a business where the owner is actually the business. Okay. So we even though we say we have to keep the business and the owner separately, but in the case of a sole proprietorship, you don't differentiate these two. That is where most of the businesses collapse. Sometimes what happens? They will take goods from the business for their own use, but they don't differentiate them. Sorry. They don't differentiate them, which is a must. When you are running any kind of business, whether it is a partnership or a sole proprietorship, anything that you consume for your own purpose have to be differentiated from the business. That is why we call that drawings. Anything taken by the owners of the business, we call them as drawings. So you have to account for the drawings to ensure that you are not manipulating your business. You are manipulating your business. Now look at the diagram, which is a simple arrangement of a sole proprietorship. So the sole proprietorship is the first square that you see, and the sole proprietor is the person who is going to run and manage this business. Now what he needs to do? He needs to go and invest money. That is called the capital investment. If I want to start up a business, I will have to initially put money. That is my capital investment. Now with whom I am going to do the business? With a third party. So when I do a business with a third party, I have a personal liability. I have a personal liability, not in the capacity of my name, but in the name of the business. In the name of the business. Say if I am calling my business to be ABC Pereira and Company. Now, if I am the ABC Pereira, I have a liability, personal liability for the sale of, for the settlement of debts and any other obligations to third party. So the third party has every right to claim it either from your business or from you individually. Now, this was not there for businesses, large businesses, corporates. Okay. Some time ago, as you know, I have already explained, the companies are managed by directors, board of directors. Now, these board of directors were not held liable for any losses or frauds that they commit. Okay. So they were left alone. It is in the name of the company, which is a fictitious party. Now, if I call today, let's say, we should not take an example. We'll say XYZ company. Now, XYZ company is a legal entity registered with the Companies of Registrar of Companies. Okay, under Companies Act number 7 of 2007, let's say. Now, people can sue this company. But now, you see that it is not only the company that is being sued, even going to the extent of suing the directors of that company, because they will be held personally liable. They will be held personally liable to settle any debts that are owed to the third parties. But in the case of a sole proprietorship, we know, even though it is an individual business, there is one person running the show. So that person has to be held responsible for all the debts and obligations of the business. What are the advantages? Now, this is very easy. And it is low cost of formation. Now, if you think that you need to be the owner of a business, what you can do is, if you have adequate space, make one room or one particular room of your house which is facing towards the road or maybe where people can access, and you will start a small shop. So which means it is very easy and low cost of formation. You can think of a small nature of a business where you can introduce. Now, I have seen people starting up with small stationery shops. What they do, if they know that there are a lot of school-going children in the proximity, and there is always a necessity where people to buy stationery items, taking photocopies, taking printouts, you can easily start up a business. But of course, you need a small amount of capital, but still, it is in terms of the capital investment that is required, it will be low cost of formation. The owner's right to make all management decisions concerning the business, I told you. I don't have to refer to anybody. I can always take an opinion, but I don't have to listen to anybody saying that this is how you should do. No, because I am the boss of the business. So it is up to me to make decisions. I can consult somebody, but they are not supposed to give me what is the thing I have to do. Okay. So owner has the right to make all management decisions. The sole proprietor owns all of the business and has the right to receive all of the profits. Now here we are talking about profits. Sorry. So since you are making decisions, you are looking after, you are putting in capital, so it is your right to take all the profits that you may earn from the business. Okay. If you are running the business, if you are putting money, then it is your right to take in all the profits of the business. Similarly, you have to be mindful. When you are making losses also, you have to absorb the loss. You can't just pass on it to somebody for them to absorb it. Okay, so you have to be mindful about that. A sole proprietorship can be easily transferred or sold if and when the owner decides to do so. So this is one classic example that I can give you is Facebook. Because Mark Zuckerberg thought it is high time for him to quit from this business and make money. So what did he do? He floated the shares or the company in the stock market. And he recovered the money that he wanted. I think he has a small stake in the company, being a director, but he has recovered his money. Now he is I don't know, it's a billionaire or trillionaire, but he is one of the wealthy persons in the world. How? He decided that it is easy for him to transfer this business. Because I don't have to look at or maybe to get the consent of anyone for me to decide whether I need to transfer or not. It is me who is going to decide whether I should transfer this business now or sell it. Okay, so you have that flexibility and easiness to transfer the business. Like the advantages, there are disadvantages also. The sole proprietor's access to capital is limited, which is to personal funds plus any loans he or she can obtain. Now, this is one of the critical factors. Now, let's say you start up a business by putting 50,000 and you see that the business is growing. Growing in the sense there is a lot of potential where you can make more money. But in order for you to make money, you need to expand your business. So in order to expand your business, you need more money to be put into the business. Now say I'm just thinking a simple example. You are running a stationery shop. So you are making a small amount of profit, but there are a lot of people coming and buying stationery from you. And people are regularly coming and asking whether they can take photocopy from you. Every time you refuse saying that, sorry, we don't have photocopy here. Now, what is this? This is a potential business where there is a requirement for people to get photocopies all the time. Because if there are school-going children, definitely that is going to happen. Either photocopy or printout. One of the two is going to happen. So you know that there are a lot of people living around who are having small school children, and this is a potential area. So what you need to do? Either you need to get down a printer or a photocopy machine. Now for both these, you need money, additional capital. So by being a sole proprietor, it might be very difficult for you to get external capital. So either what you can do is you have to bring it from your savings, whatever that you have in the bank, or maybe you have to borrow from one of your relatives. Worst come to worst, if there is a possibility where if any bank is willing to lend you, then you can go and obtain a loan. So what you mean by here is the sole proprietor's access to capital is very limited. But if you are a company which is listed or maybe a partnership, where you can always go to another person and ask, which is very easy. If there is a partnership, you can always look at other partners to bring in money. Sometimes they might not have money also, but you have a support, a shoulder. But in the case of a sole proprietorship, you don't have anybody like that to support you, unless your parents or relatives or siblings, whoever, may not be from outside. The sole proprietor is legally responsible for the business's contracts and the torts committed by the proprietor and his employees in the course of employment. So that is very straightforward. You are a sole proprietor, and as a result, you are legally responsible. You are legally responsible for all the contracts that you enter in your business. Similarly, you are also responsible for all the torts committed by you or maybe anybody working under you in your business. Say some guy who is assisting you in your day-to-day operations has made committed a tort or a fraud. As a result, there is a third party who is impacted. Now this guy will come to you and say, look, I have been forged or defrauded by this guy. End of the day, not the worker who is responsible, you will be responsible. That is a disadvantage. Now let's look at the financial statement of a sole proprietorship. So the performance of the business is judged on the basis of income earned, accrued during the year in the form of profit. Okay. And this profit is measured at two levels. That is where we come to an important point. The profit is measured at two levels. One is the gross profit and the second one being the net profit. So in the case of a sole proprietorship, you know the motive of the business is to make profit. So how you account for the profit is you have to see what is the income that I have earned or what is the income that I have accrued during the period. Now here also you can limit it to a financial year. You can evaluate your business restricting it to a financial year because you will do business looking at a financial year. So you have to be mindful about that. The financial position of the business enterprise is judged by measuring the assets, liabilities, and capital. So that is all within your business. Your assets, liabilities, and capital will be measured. Profit is measured at two levels. As I told you, it is gross profit and net profit. Now we come to an important financial statement, which we know as the income statement, or in other words, please mark it, the profit or loss statement of the sole proprietor. Profit or loss statement of the sole proprietor. Now the P&L is, or the profit or loss statement is divided into two parts. One we call it as the trading account. The other one is the profit and loss account. Okay. One is the trading account. The other one is the profit or loss account. Right. Let's look at the board. The sole proprietor business so you know the profitability or the income statement, we call it as the income statement. We can divide it into two. One is called the trading account. And the other one is P&L. Okay. So I'm not going to use the word P&L for the total thing. Let's say the total thing will be income statement. Income statement. Okay. So we are going to use the term income statement to look at the profitability, which you will learn actually under LKS 1. We will do it. Trading account and P&L account, the two parts. Now, what do you mean by trading account? Trading account is your heart or the core business. What is that? Buying and selling, or manufacturing and selling. It could be anything. So, what are the underlying points? Now, you have already learned books of prime entry. Under the books of prime entry, we learned about 7 day books, out of which there are 4 day books which are of very importance into this. What are those? Sales, sales return, purchases, purchases return. Okay. So the cost that you incur for you to purchase is recorded here. For the stocks or the goods manufactured, when you sell it with a price, you record it here. When a sale gets returned, you book it in the sales return. When you purchase something and you return it, you record it in the purchase return. Now this is in the case of a credit transaction. Apart from that, you will record cash transactions also. Cash transactions also. Right? So your core business is that will be accounted under the trading account. The trading account. But in order to run this business, you will have to incur. I'll make it into 2 layers. There will be administrative, or we call it as overheads. There will be a lot of other expenses you might have to incur. Like you have to pay electricity, you have to pay for water, you have to pay for telephone. There will be a lot of other administrative level expenses, which we call it as overheads. Similarly, you might derive other income as well. Okay, you might have some investments. Okay, this is your core business, trading, buying and selling. So you will have to record everything under your trading. But anything beyond that, any income and all the administrative expenses are recorded in the P&L. Okay. The result of the trading account will give you the gross profit. The result of this will give you the net profit. So you have to be very clear. You start with the gross profit and you narrow it down to the net profit. Narrow it down to the net profit. Or you grow it down to the net profit. Okay? So your gross profit, generally, we don't assume this to be there. Okay? Sometimes you might have it or sometimes you might not have it. So basically, the gross profit is your profit actually. By leaving out this aside, what will happen? To your gross profit, all these will absorb your overheads. Then what will happen? Your profit will get narrowed down to the net. Okay? So please take down this just for your information. It will be useful to you. Okay. Now let's look at the two components. Now let's look at first the gross profit. Okay. So the gross profit is basically what you have to do is you have to look at the sales Then you deduct sales return. Okay, so you have sales, then you have sales return, then you have what do you call the net sales. Right? So I am following a two-column concept where you will put numbers in two columns, sales less sales return, you deduct that and you bring it to the next column, which is the net sales. Then we have to look at less. In order to make this net sales, what is the underlying cost that I have incurred to make this sale? So we call that as cost of sales. We call that as cost of sales. We call that as cost of sales. So how we calculate this is, we start off with the opening stock. Since we have now already learned the inventory, LKS2, this is where it comes. So you have an opening stock value. And what do? You add purchases during the year. Okay, you don't need to say during the year. You add the purchases less sales also has sales return, so purchases also might have purchases return. Then finally, you deduct the closing stock. And you remember the values that we calculated? So similarly, you will have a value at the beginning and the value at the end. So you deduct that also. Then you will have the cost of sales. When you take the difference between the two, that is known as gross profit. Gross profit. Okay. So that is what I have already put in the slide also, but just make yourself understand how this is structured. Now in examination, if you are required to do, you will do it in a two-column format. Okay. And these are the contents mostly. Sometimes if they have given me a carriage inwards. Carriage inwards will come here. It has to get added. Carriage inwards is the cost that you will pay to bring in stocks to the showroom or to the business. Okay. So now what is the next step? Next step, we go to the profitability of this business. So how that is going to be calculated is, must be there in the slide as well. So I'll explain it from the slide itself, which will be more easy for you. Right. So starting from the gross profit, what we do, we go into the net profit. So what you do, you go and add any other income that you have in your business. So other income is any other source of income, like you have made an investment, or from your bank balances, if you get some interest from the bank, that you can have it as other income. So all those will come there. Then you have expenses. You have expenses. What are the type of expenses that you might get? You might get administrative expenses. Okay, you might get administrative expenses, paying salaries, stationery, all those will come there. Then you might also have selling and distribution. Selling and distribution is whatever the expense that you might incur in the process of selling and distributing it to the customers. Say, for example, selling in the sense you might have to do some advertising, suppose. Then that will consider as a selling expense. Sometimes, if you want to make more sales, you might have to get some sales people to do it to you. So you might have to pay some sales commission. Then if you are using a vehicle to distribution, for the distribution purpose of to your customers, then you have to have all the expenses going under that vehicle to be considered as distribution expenses. Then also you might have financing expenses. Financing expenses means if you decide to expand this business where you want to have a loan from the bank, then for that loan, you have to repay that loan and you have to pay interest for that loan. All those are considered as finance expenses. When you deduct the total expenses from the gross profit and the other income, you will get the net profit. You will get the net profit. So please remember, under the sole proprietorship, the first part is your trading profit or the trading account, which is the gross profit, and then the net profit, which is coming from your P&L or the income statement. So I have given you some examples, what and what could come under administrative, what and what come under selling and distribution. And this is the structure of a balance sheet. This is the structure of a balance sheet, how it appears. You have tangible fixed assets, intangibles, investments, and current assets. Okay, so this I have given you this balance sheet with a larger scope. Not every sole proprietorship will have those. Some sole proprietorship businesses might not have any fixed assets. They will just pay a rent and get office space and run the shop. Okay, so not all the businesses will have fixed assets and so on. This is just an extended list. So what you have to do is you have to list all the fixed assets and then the intangible assets, then investments if you have any bank deposits and so on. Then you have the current assets. Look what is there in the current assets. Inventory in trade, that is your closing stocks. That is your closing stocks. Then You might also have some receivables. Receivables means your debtors. Your debtors. There could be instances where you have made payments in advance. Payments in advance. Those are called prepayments. Or you might have given something in advance, like to a star, one of your employees, anything like that. Then you might have a bank balance which is a running balance in the bank account. And the last item is the cash in hand. So you see, the bank balance and the cash in hand is recorded in your cash book. Okay. Trade receivables is recorded in your debtors or the sales day book. Right. Likewise, you will have liabilities also. What are the liabilities? You have the capital account, the money that you have brought in. Then you will have the net profit or loss. That is what we discussed now. Then most importantly, look at the item, less drawings. Anything that you have taken for your personal use is your drawings. Then you have long-term loans and short-term loans. Long-term loans is where you have taken long-term loans from the bank. Short-term loans is where you might have taken overdrafts or maybe short-term loans like for repayable in within 1 year and so on. Then you have the current liabilities where you have creditors, any outstanding expenses, or you if you have taken any advances from anybody that will be appearing. And you might also have provisions. Say if you are running a business on credit terms, there will be a lot of people who might sometimes will not pay you. So when you have a doubt on them, you have to make a provision which is known as the bad debts provision. So that is all about the sole proprietorship, P&L and the balance sheet. Now let's look at this question. I want first you all to do it and then I'll do it in the class. So read the question and see whether you can do this by looking at the template that I gave you. We have already done it for the trading account. So just see whether you can do this quickly. right? So if you look at the question, there is opening inventory, which is your opening stock, purchases, carriage inwards is there. There is something called wages. What is that? What is wages?
An expense.
Yes, an expense. But what it is?
Administration expense.
It's an administration expense. Any other answers? Now this term wages, you have to be very clear, because what do you mean by salaries? What do you mean by salaries? Salaries are paid to your permanent employees who are on employment. But wages are not that. Wages are paid for workers who are on temporary basis and for a temporary assignment. Say for example, in this question, particular question, wages relates to the expenses incurred by the business for people who are carrying in goods, or maybe downloading goods which are coming into the business and stocking the goods that are going out of the business. So this is like a payment that you make for temporary staff, laborers and so on. So the wages is actually not considered as part of the administrative expense. It is part of your cost of sales. It is part of your cost of sales. Okay, so you have to remember, in examination they might give you salaries as well as wages. If they say salaries and wages, then you can put it under administrative, no problem. But if wages are given separately, then it is appropriate for you to put it under the cost of sales, not under administrative. Then you have sales. Okay. Then return inwards. What do you mean by return inwards? Return inwards. What is return inwards? We have already learned. That is sales return. Sales return. Sales return. So if return inwards is sales return, what is return outwards?
Purchase returns.
Purchase returns. That is purchase return. And the last one, closing inventory. Closing inventory. Okay, closing inventory. So if you look this question, look at the board. This is how it would look like. If you are getting a question in the examination, this is how you should do. That is, the company name has to be at the top. Then what is the item that you are preparing? You are preparing the trading account. So you have to say trading account. Then you have to say for the year ended 31st March 2011. That is the period that they are asking about. Then you have to maintain two columns like this. And then you have put down all the items. Sales less return inwards, net sales. Then all the cost of sales items. Then you will get the final answer. That is your gross profit or loss. We can't say here whether it is a gross profit or loss. So generally we expect it is to be a profit. So let's say profit. If not, we have to write it as loss. Okay. Now look at the numbers. Sales 1.1 million. Return inwards 100,000. So you have net sales of 1 million. Then you have opening inventory, which is again 100,000. Purchases 672. Carriage inwards 30,000. Wages 50,000. Return inward we have already taken. Return outward 72,000. And closing inventory 200,000. So what is the total there? 672, 600, 700, 780, I think 580. So the cost of sales is 580, which means it is a profit of 420. So most of you might have got the answers correct, but what is important is the format, how you prepare or how you show the financial statement. Okay, any questions? All clear? Okay, let's look at the next question. So here they want you to do a balance sheet. So what they have given is a trial balance, and you need to do the balance sheet. Can we give it a try? Can you try that? Okay, so what you all do is you all continue with that question and complete it as a homework. You can refer to the template that I have given and complete it. But let's look at this past paper question because I just want to discuss that. Okay. Shall we look at the past paper question? It's already there in your handout, right? Is that okay? Yeah, fine. So look at this past paper question which came in March 2017, and this is a separate essay type question which is for 20 marks. So let's look at it. Nelum Bank PLC is currently assessing a loan application submitted by its customer Lotus Traders. So you see that the objective of this examination or this module is to give you an understanding of what is expected out of this module. That is to give you an understanding of how you will evaluate your customer's requests for a loan. So if that is the case, then you need to be in a position to analyze the financial statement of your customer. It could be a partnership, it could be a sole proprietorship or anything. So here we are looking at a application received from Lotus Traders for a new loan of 100,000. So they are applying for a loan of 100,000. Answer the questions based on the following ledger accounts of Lotus Traders for the year ended as at 31/12/2016. So what the bank will do, bank will ask for a financial statements. But this company has not given financial statement. They have just given some account balances taken from their ledger accounts. Okay. So see what are the balances that they have given. They have said sales 250, cost of sales 200, other income 10,000, operating and other expenses 50,000, fixed assets 160,000, payable water bills 10,000, current assets 30,000, current liabilities 40,000, long-term liabilities. They have taken already a loan from earlier bank for 60,000 and they have capital of 70,000. So now you know what is income, what is expense, what is asset, what is liability, and what is equity. I don't need to tell you because we have already done those several times in the trial balance. When we were doing trial balance, I explained it to you. Okay. So can you all quickly mark the items on alongside what is income, what is expense, and what is asset, and what is liability, and what is equity? Quickly. There are only few items. So what is the first item? Sales. It's an income. Cost of sales, expense. Other income is already given as income. Yes. Operating and other expenses. Yes, it's an expense. Fixed assets is an asset. Payable water bills. What is that?
Liability.
Liability. Very good. When you see the word payable means it's a liability. Then current asset is an asset, current liability is an liability, long-term liability is liability again, capital means your equity. Okay, right. Let's go to the questions. Calculate net profit of Lotus traders for the year ended 31/12/2016. Can we calculate it quickly? Calculate the net profit. They are asking about the net profit. And you know this is a traders. So what do you need? First you need to have the gross profit and then you get the net profit. So they are asking for you for the net profit. What is the net profit? How much is it? Any answers? Answer has to be 10,000. Why? You have sales 250. Straight away they have given you the cost of sales also. So 250 minus 200,000 will give you 50,000 of gross profit. 50,000 of gross profit. So to that gross profit, what do you need to do? You need to add the other income. So 50,000 plus 10,000 is 60,000. Then you need to deduct what? The overheads or the expenses. So what are the expenses there? Operating and other expenses, which is 50,000. So 60,000 minus 50,000 means again you will end up having a net profit of 10,000. You see, gross profit is 50,000, but net profit is only 10,000. I told you it will get narrowed. Okay. So net profit, the answer is net profit is 10,000. Then they are asking for calculate two financial ratios that are useful for assessing the repayment capacity of Lotus traders, which I am going to leave now because we have to do financial ratios, then only we know, right? We will leave it that at this point. Then the third one, they say, what is the applicable accounting concept for accounting of payable water bills as shown in the above financials? What is the answer?
Accrual basis concept.
Accrual basis accounting or accrual concept. Very good. Now you see, just for writing accrual concept, you get 5 marks. Okay. This question has 20 marks, out of which 5 marks each for each part. So first part, when you calculate the 10,000 net profit, you get 5 marks. Second part, after, of course, now you haven't learned the financial ratios, but if you do the two financial ratios, you get another 5 marks. Now the third part, just for writing the accrual term, the word accrual concept, you get 5 marks. So if you don't know what this payable water bills is, then you are just losing 5 marks. So payable water bills is a liability. Yes, we understand that. But how that liability comes? Because you know that by the end of the financial year, if you have not received the actual water bill, what you will do? You will make a provision. You will make a provision. How do you make the provision? Using the accrual concept. Using the accrual concept. Then they are asking for, in terms of accounting, what is the main difference between current liability and long-term liability? So current liability and long-term liability, of course, we have to learn. That is coming under LKS 1, which we will do. But simply put, current liabilities are all liabilities which you have to meet within the next 12 months. Okay, within the next 12 months. Anything that you have to meet after 12 months will be your long-term liability. Long-term liability. So it's fairly a very easy question if you really see. after learning everything, you will note that getting 20 marks from this question is nothing. Okay, so it is very important that everything that you learn, you have to keep a track of it, because the question could be a mix of all that. You can't just quantify and say that no, this question is from this area. It may not be. So now this has a combination of financial ratios, the sole proprietorship, and then the concepts that we learned. And finally, it is actually a standard LKS1, which explains the long-term liability and current liability. So there are combinations of topics which comes into one question. So you have to be very thorough with what you are learning and keep revising. That is very important. So I want you all to go through this balance sheet question, which is there, and do it when we meet next week, next class. And by the way, I want you all to inform that we are going to have a class on March 11th. Which is a bank holiday. Okay, March 11th, 2021. And I'm planning to have this class from 8:30 a.m. to 1 p.m. It will be a 4-hour class. It will be a 4-hour class with a break of maybe say 15 to 30 minutes in between. So why I'm having this class is because I'm going to start with an important topic, which is SLFRS 9. SLFRS 9. And I need at least 4 hours to do this topic on a continuous basis, because if I break 1 week today and do it on the next week, it will be not clearly understood by you all then. So better for us to do it using this holiday that we get, to utilize it maximum and try to understand this topic, because this is going to be the topic as far as your examination is concerned and as far as the business in the future. Okay, so SLFRS 9 is going to be the topic, very important. So I would like you all to join, because later on we will not be able to do it again. So there won't be any time for us to do a revision again. Please make yourself available for this 4-hour class where we will finish off SLFRS 9. Okay. Meantime, better if you can have the past papers also ready with you. At least the recent 4 papers. I don't know whether the January examination paper is available, but at least 4 papers prior to that. Please have them with you. Now, I'm not quite sure with the examination date, because that IBSL might inform you. But let's try to finish off the syllabus first. That is the first thing that we have to do. So, because we have few more topics to be covered. So, if I can cover this on March 11th, that will be a great achievement, because that is one of the biggest topics that we need to look after. Okay. So let's catch up on March 11th. And if there are any friends who have not joined us today, please keep them also informed, because that is important, and ask them to join this important class. We will not have time again to go through it. So please make sure that all your friends join. Have a pleasant weekend. God bless you all.